Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of how do you challenge an IRS audit, right? They woke you up for no reason, IRS sends you a notice, you do the audit, you think the agent's not fair, the examiner didn't follow the rules and you want to challenge it, right? Let's go through the basics. So first of all, IRS tax audit, right? And we're talking about individuals. So generally, the complexity of the audit will be determined by whether it's for 1 year, is it for like a single year audit, or is it for multiple years? Did the audit go one session? Did it go several sessions? Did you only have one information document request or several? You get through all the hoopla, you jump through all the hoops, and then at the end of the day, it's over finally, and you get a notice of proposed examination changes, letter 4549, right? It shows up, you've got some options, right? First thing you could do is just sign it and be done with it, but then you wouldn't be listening to this presentation, right? So you want to challenge it, right? So you'll see there's different things you could do, but typically the first step is you request an appeals officer, okay? It'll go to the IRS Office of Appeals, independent quote-unquote body of jurisdiction that will review the underlying situation to see if it was fair, right? They basically will request for you to provide all the documents and all the information so that appeals can sufficiently take a look and see what's going on. Something to keep in mind though, they will review it, come to a conclusion, but while generally the idea would be your thought is that the examiner overstepped their boundary or just wasn't playing fair and you want it reduced, technically it could increase, right? The appeals officer could find something else and they, at the end of the day, the IRS could end up increasing it, so it's something to keep in mind. If you think it's unfair during the audit before you get to the 4549 phase, you can always, request to speak to a supervisor, depending on where the audit is, what the situation is, what the facts are, and what IRS office you're dealing with, what location will impact whether they will listen to this or not. But sometimes, we've had situations where taxpayers were really getting a raw deal from the get-go, and then they were able to have a supervisor at least transition the file to a different officer who the taxpayer ended up believing, or a different agent or examiner who the taxpayer believed was at least more fair. Another situation that comes up that not that many practitioners know about is something called the Audit Reconsideration. There's no specific form. I believe it's publication 3598, but don't quote me on that. If for any reason the underlying audit, sometimes it'll be because the taxpayer didn't have a chance to appear at the audit. Maybe they didn't get the notice. Maybe they had a fraudulent preparer who never told them about it. We've had that situation with a client in the past. Or some new information came to light that they didn't have and couldn't have had during the audit, or really it could be for any reason, but those are the main reasons. Then the taxpayer can make a request for an audit reconsideration. And in that type of situation, generally the person who reviews the file will go through it in some detail and kind of reassess the situation, right? Especially in a situation in which a taxpayer did not have any opportunity to dispute it, whether because they didn't get the notice or because fraudulent tax preparer, or like I said, if that information was available at the time, like the fraudulent tax preparer, because the taxpayer doesn't know at the time that they hired the preparer that it's fraudulent. It's not till later down the line. So at the end of the day, depending on how it works out or it doesn't work out in the taxpayer's favor, at some point they'll receive a notice of deficiency, a nod letter, which will give them 90 days. They might get a pre-30-day letter first, but the notice of deficiency letter is 90 or 150 days if out of the country, gives the taxpayer the opportunity to go to tax court. Super tight deadline, you can't miss that deadline. If you miss that deadline, you may not have the opportunity to petition the tax court. Some taxpayers instead will pay it and then claim refund, and then if the IRS doesn't refund it, they'll go to federal court. But the benefit about tax court is you don't have to pay it up front first. For a lot of taxpayers, they don't have those funds to pay necessarily, so paying it and then getting reimbursement, seeking the federal court route is just not a viable option. If they get an NOD letter and they decide not to go to court, they decide, then the IRS will start coming after them at some point. And then when it gets to certain phases, certain final phases, then the taxpayer can normally do something called the CDP, which is a collection due process. It's filed on Form 12153, and that basically stops the clock and will put the case before an SO or a settlement officer, who will take a long, hard look at it to determine whether or not the taxpayer should be given a reduction in tax, or maybe even if it's penalties, to have the penalties waived. One nice thing about the CDP is that a taxpayer can make the claim for reasonable cause, that there was a reasonable cause and not willful neglect, and therefore there shouldn't be any penalty. So it's essentially another bite at the apple. The downside for the taxpayers is they have to wait until the end game. And so when they get a notice of intent to levy, it's bad, but no levy's actually been done yet, versus if they get an NTFL, which means a federal tax lien's already been filed, then they're already dealing with that issue. And so it's, especially if someone's looking to sell a house or transfer property and it's got that lien on there, it could be a big negative consequence. If you're a taxpayer, you're out of compliance for reporting assets, accounts, investments, income to the IRS, and you're considering one of these disclosure programs before you audit, because once you're in an audit, you don't qualify for these programs. There's lots of programs available. There's voluntary disclosure, VDP, if you're willful or just can't certify under penalty of perjury that you're non-willful. If you're non-willful, there's lots of different programs available: streamlined domestic, streamlined foreign, reasonable cause, delinquency procedures. We have lots of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.